Good morning. Welcome to Stock Market Today. It's Monday, October 14th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today where you can sign up for a free email where you get daily stock ideas for you to consider in your inbox every trading day before the market opens. So I hope everybody had a great weekend. Now let's get right back into it. U.S. equities closed higher in Friday's trading, though they were off their session highs. The S&P 500 broke a 3-week streak of declines. Industrials and materials led the way higher on trade optimism. Remember, we started to get quote-unquote phase one of a trade deal between the U.S. and China. With that, the defensive sectors were lower on the day. REITs and utilities and consumer staples all underperforming the market and trading lower. As well, treasuries were weaker across the curve. The dollar was down against the euro and stronger against the yen. Sterling was the big story in Forex. They saw big gains on the latest Brexit headlines. Gold was down 80 basis points, but off the worst levels of the day, and WTI crude settled up 2.1%. As we get to the desk here this morning, futures are giving a little bit back, down 20 basis points, but off the worst levels of the morning. Asian markets were mostly higher overnight, with China up more than 1%. Japan was closed for a holiday in Asia, however, and European markets are weaker here this morning. In the U.S., the Treasury market is closed for the Columbus Day holiday today. The dollar is a bit weaker against the yen, a little bit stronger against the euro. Gold getting some back today, up 70 basis points, and WTI crude giving it back today, down 2.2% to start the week. As we look at the S&P 500, we had this gap higher on the easing U.S.-China trade tensions. Actually, amazingly, came very close to the 3,000 mark before fading into the afternoon. The gap did take us back above that 2950 area. So that resistance zone, if you will, that we've been highlighting between 2950 and 3,000, kind of doing its job on Friday, rebuffing the optimism around the market. As we think about key support, it's in the area of the 200-day moving average, near 2850 is the top end of key support. The moving average is actually at 2853. And the key level, as I have been saying, is near the August lows around 2820. So far, the RSI is holding bullish ranges, got a nice tick higher above the 50 mark on Friday afternoon with that gap up in price. However, the fact that the market faded into the afternoon and closed near the low of the day on Friday keeps Chaikin money flow in a bearish range as it dipped into that bearish reading on Thursday morning. So from a market trend standpoint, not a lot has changed. I think the key levels for investors to be keying on: to the downside, 2850, to the upside, 30-20, 30-30, to break us out of this range that we've been in for the past few months. Now, our market in a minute, what are we writing about in our note today to Chaikin Analytics clients? We touched on optimism around the U.S.-China trade relations. We're looking at small caps here a little bit. They are beginning to hold support, or they have been holding support, and bearish momentum may be fading. We'll take a look at what that means a little bit later on in the show. Likewise, the 10-year yield rallied from support near 1.5%, and downside momentum there does appear to be waning as well. Gold continues to consolidate strong gains, and as we said, futures do point to a lower open here today. Taking a look at the power bars now for the major indices. Dow still skewed in favor of the bears despite that 1% plus rally on Friday. 6 bearish or very bearish stocks, 3 bullish or very bullish stocks. S&P 500 adds 1% on the day, and that flips the ratio here. We are now back to a bullish skew, 100 bullish or very bullish stocks for 87 bearish and bearish stocks. Likewise for the NASDAQ, adds 1.26% on Friday, gets that ratio back to the bullish side of the equation, 18-16. Small caps were an outperformer. It's not often that we've been able to say small caps were an outperformer, but they were on Friday. 546 bulls, 373 bears there. Obviously, risk-on type sentiment put some pressure on bonds, sent yields higher. Bonds down 0.24% on the day. And materials, right, one of the areas of the market leveraged to trade, added nearly 2% on the day. But I will note that the power bar ratio for the materials sector is still skewed in favor of the bears. 5 bearish or very bearish stocks, 4 bullish or very bullish stocks. According to the Chaikin power bar, small cap stocks, large cap stocks are somewhat bullish, but the major markets are mixed. Let's hit our stock of the day now, because we made a big fuss about semiconductors on Friday with the relative breakout. Remember, we talked about that here on this show. It's fitting that Micron is the stock today that was auto-generated by our algorithm. MU is the ticker symbol, closed at 45.10, up over 4% on Friday. Very bullish Chaikin power gauge rating for Micron due to very attractive financial metrics, very positive expert activity, but I will note that the technicals are somewhat dicey here. But when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. And that very bullish rating is met with a stock that's in a strong trend above the long-term trend line and in a strong industry group. You've heard me talk about semiconductors here for a while. So this is certainly the type of name we want to consider owning. So next we want to see, are the market and model in agreement? What does that mean? Is the stock outperforming while it sports that very bullish rating? And it is. Rounding out of an oversold position, the one bother that I have here on Micron is this intensely bearish money flow. Now, that's largely a function of this big sell-off following earnings, but the stock is holding key support at the $42 level. So if I'm looking at Micron, the more aggressive investors out there who are looking for opportunities in a leading area of the market, the weight of the evidence does support a bullish trade in Micron. I can't argue with it. I think you do have to be mindful of this bearish money flow and the key support level at $42. If 42 gives way, you have to reevaluate your view on Micron, in my opinion. So more conservative investors want to give this some time, maybe give money flow some time to improve. I can't argue with that strategy either. There's a couple different ways to look at it. There's no one size fits all when we're thinking about trading and investment strategies. You have to figure out what works best for you. If you're more aggressive, I think you can take the trade. If you're more conservative, you might want to wait it out on Micron, ticker MU. Let's hit our sector tracker now. Movement of the major sectors over the last 5 days, and certainly an about face with that move on Friday. Sectors of the market that are leveraged to trade, that tend to do well. If we can get a trade deal on the table, materials and industrials and discretionary moving to the top of the list. All outperforming over the past 5 days. Tech, energy, and comms are kind of middle of the road along with financials. Financials could see a bit of a tailwind here if rates could get some upside traction. So something to keep in mind, because the fundamentals around the financials based on Chaikin analytics and our model have been solid for some time. We've been waiting for the market and model to get an agreement, and the rate story has made that difficult. If we are seeing a bottom in rates and rates are going to begin to move higher, we want to start to pay attention to the financials. Likewise, higher rates could be a headwind for the bond proxies in the equity market, that being real estate and utilities. And in addition, if to the extent that a trade deal does ignite those animal spirits and induce a risk-on type environment in the marketplace, you have to think healthcare and staples are going to struggle to gain some relative traction, because those are defensive areas of the market. So just some shifting dynamics possibly beginning to play out. Still early days. We're going to want to watch closely, though, because the potential for trend changes are certainly there. Now, our industry in focus, healthcare services. Over the past 6 months, this group has underperformed the S&P 500 by 3.72%, but that power bar ratio, which measures future potential, is strong. 8 bulls to 7 bears. Some of the indicative names there, THC, Cardinal Health, and Select Medical, all have very bullish ratings. But what's interesting to me is it's early days here, because the fund itself that tracks this group has a bearish rating, and it's in a clear downtrend below the long-term trend line. It is intensely underperforming the market with intensely bearish money flow. So I do think it's still a little bit early to start thinking about this group. Selectively, if you want to start to look through some of the stocks here, some of the 8 bullish or very bullish stocks, I can't argue with it, but I do think it's still a bit too soon. Turning now to yesterday's or Friday's gainers and losers, our movers and shakers. Fastenal up on earnings. FCX and Mosaic, solid moves higher with that materials jump. Win is a name that's levered to China. That stock moves higher by over 6% on the day as well. ROK is a trade-related name, up 6% on the day on Friday. So you can see the theme there, away from Fastenal, which was earnings related. The rest of them are in and around optimism around trade. Now, EIX gives back 3.86% as rates move higher. Newmont comes under pressure as gold has been consolidating. Market access down 3%. No real company-specific news to drive that one lower. Church & Dwight is a defensive name, was down 2% on the day, and it looks like some potential profit-taking / rotation weighed on Northrop Grumman, which was down 1.77% on the day on Friday. But I will note that Northrop has been one of the leading stocks, been one that we've been a big fan of for a long time. So down nearly 2%, maintains that very bullish rating, could present some opportunities. I think you want to do some work on Northrop. Let's look at the charts now. I said that bearish momentum looks like it's fading for small caps. What do we mean by that? Well, here's the IWM, the iShares Russell 2000 ETF, and you can see it's in a pretty well-defined trading range for the past 12 months, right? Some support, or at least for the majority of 2019. Some solid support around the 145 level, resistance up here, we'll call it 158 to 160. But what's interesting to me is that on the most recent tests of support, the RSI has not been able to become oversold. And to me, that is a sign that momentum could be waning, right? Bearish momentum. It's been an underperformer for most of the year, but there are signs that that momentum could be waning, right? We still need to break out of the range above the 160 mark. We're battling with the 50-day and 200-day moving average with Friday's trading activity. And Chaikin money flow is slightly bearish, similar to what we saw for the S&P 500. But this momentum dynamic is what kind of has my attention here. For now, though, the relative strength has been the key driver of our view on small caps, right? They haven't hurt you on an absolute basis, but on a relative basis, small caps have really underperformed their large cap peers, and that's really been the crux of our view on small caps and why we favored large caps. Until that changes, that continues to be the case, but we are watching closely here, because if we begin to hold support and can get a breakout with some momentum behind it, stands to reason we'll start to see some relative strength as well. So it's something I'm watching here as some shifting changes in relative and absolute trends start to play out. Another one that we're watching closely is the 10-year yield as it rallies from support. All right, we're taking clear downtrend for the 10-year yield, right, for most of 2019, below a 50-day moving average, below the 200-day moving average. However, that most recent leg lower that tested and held the 1.5% level sparked a rally that took yields back over the 50-day moving average. And what's interesting to me is that that pullback did not produce an oversold reading on RSI. We actually have a series of higher lows for the RSI. And what's interesting to me is that after routinely becoming oversold throughout the majority of 2019, most recent legs lower have not been able to produce that oversold condition. So what does that tell me? That tells me that downside momentum in yields could be, key phrase, could be waning, right? Obviously, we're going to want to see some confirmation. You'd love to see the yields push back through 2% if you were rooting for higher yields. And we have to start to think about what that means for the equity market, right? Could be a tailwind to the fins, headwind to the bond proxy, REITs, and utilities. We're not there yet, but we want to pay attention to these potential shifts in the sands as early as possible. And finally, we'll take a look at gold here. Gold has had a strong move off those May lows from about 1240 that took it up to about 1550, 1560. And what I see here is just a consolidation of that strong move. The key level for bulls on gold is 1460. As long as we're above that level and the RSI is holding in bullish ranges, I think it pays to remain constructive on gold, and odds favor an upside resolution to the consolidation. If that level breaks, we have to reevaluate that view. Another reason that we think it's likely to hold is the relative strength is holding above key support when we look at it relative to the S&P 500. Remember, it's not just stocks that we look at relative. We're making asset class views here, and people are making decisions in and around asset classes, so it makes sense to look at gold relative to the equity market. That's going to wrap it up. ChaikinAnalytics.com/today for the email. I'll be back here tomorrow. Have a great day.